Right. So, welcome everyone. My name is Gonçal. Welcome to this second meeting of our group. I hope you don't mind that I'm not using a face mask and I will be speaking the whole meeting. So for those of you that are wearing a mask. So as always, I will start with a superb joke. So for the ones that were not in the first meeting, I will quickly repeat that one. So the joke was, I think Ireland is the richest country in the world, and it's because its capital is always doubling. Cool. The joke of this week is an investor to his advisor, have I lost all my money? Is all my money gone? And the advisor, no, of course not. The money is with somebody else. Cool. So again, for the new people, my name is Gonçal Camara. I'm a fourth year maths student doing an integrated master's. So I'm in my final year. Anyone that wants to ask me anything about modules that I've done or anything, just ask me. A financial sector analyst like you 3 years ago, go ahead, financial sector. So then I came here 2 years ago. I'm portfolio manager last year, which is more or less what is this year as well. Then I hold that CFA investment management certificate, IMC, which is a pretty good certificate. I mean, it would put you in a strong position in terms of applying for jobs, summer internships, graduate roles, and all of that, because it really shows that you are serious with your career. And there you have my LinkedIn page. As I said last week, it's really, really important that you start building your LinkedIn profile from your first year. Sorry, it's not something that you build in one day. It's something that you build over, let's say, the years to get a very good LinkedIn profile, which is very important. Quickly, introduce yourselves. Name, degree of study, what year are you in? So let's start from there.
Okay, so my name is Wenling Jia. I'm third year accounting and finance student. Yeah, that's it.
My name is Jimin Zhou. I'm a third year finance and accounting and finance side.
Cool.
I'm Conrad and I'm a first year economics student.
Cool.
I'm Gabriel, I'm an economics master's student.
I'm Shreya. I'm doing a master's in finance and investment.
Cool.
I'm Joel, I'm first year banking and finance.
I'm Umair. I'm doing a master's in finance and investment.
Okay.
I'm Oliver. Currently, I studying the master in international business.
Cool, guys. Thank you for that. So again, why are you called analyst? I explained this in the first meeting quickly. You are called analyst because you will take part in the portfolio, how you will bring trade ideas. So you will think of a company that you think will do well in the near future, because this competition runs, I don't know, probably March or April next year. So we need to look for kind of a short-term horizon, and your trade ideas will be converted into portfolio trades. Yeah, almost certain. First game of the session. Read that, please. Some of you already know how to play this. So you are looking for, you are looking for a US company that is publicly listed and that is trading right now. Hint to the game, look for a volatile stock, but that you think it will rise in the next 45 minutes. Write down the chosen stock and the price of the stock to 2 decimal places. So let's put here stock, price, let's put here 6 p.m. and let's put here price 7 p.m. So the person who gets the stock that raised the most in these 45-60 minutes wins the game, and there you have the prize, some sweets or some Ferrero Rochers. So let me choose my company quickly. Yes, so my company is Moderna. I can explain you later why I chose this. Moderna. The price is. Do you understand the game? Is there anyone that doesn't understand the game? The new ones. 245.245. I know you understand the game, Conrad. 245.30. Cool. So I'm going to start with you, Conrad. So when the rest of the people have this page, know what to do. So you have here 3 columns. One with the stock. So you write the name of the stock. It doesn't have to be the ticker or anything like that. Then the price right now to choose the decimal places, and that's it.
Do you want to write a name as well?
The name of the stock.
Ah.
Yeah, of course. Don't worry about the dollars. Cool, so there it is. So again, look for something that moves, you think that is going to move quite a bit to the upside. I mean, it's difficult to find a good stock, and then it's even more difficult to find that it will go up in the next 45 minutes. So it's kind of a game with no, I don't know, underlying factor. But I think it's good to then learn something important at the end. So, right, I hope all of you have more or less the stock and the share price. So I'm going to continue with the next slide. Okay, the thing is that people are still with their phones, so I will wait 1 more minute. So what we're looking is for some stock that is quite volatile, I don't know, some pharmaceutical, some technology stock, maybe a small stock that moves a lot, and that means that it should move in the next 45 minutes, and if you are lucky, it will go up, yeah, let's say quite considerably. And you will get the price, but yeah. So let me carry on with the next slides. So ladies, if you can pay attention, and yeah, everyone else. So the group meetings, we will start with this first game, then market update, news, indices and stocks, portfolio performance, new material, trade ideas, analysts discussion, and finally the end of this first game, and then a financial Kahoot quiz. Do you have your stocks? Not yet, okay. Cool. So what do we have this week? 2021 United Nations Climate Change Conference COP26 comes to an end. So what are the conclusions of the COP26? So mainly for some people the measures were not enough, and I guess that for politicians, yes.
Can you repeat the stock if it's already written down?
Repeat?
Yeah.
No. Think about another one and pass the probably page to the next one. So, yeah, I mean, what I just said, for some politicians, they did a lot in terms of, I don't know, removing coal from mining and all of that, and for probably the rest of the people, we think that not enough has been achieved. So, yeah, I mean, you can read here quickly what you have in the screen. But yeah, I mean, the thing is that I guess for politicians it's very difficult to tell the world or the country that yes, they want to cut in, I don't know, fossil fuel extraction and all of that, but then they have big companies behind them telling them that they cannot do that in the near term, and they need as many years as possible to achieve that, because if they carry on doing what they are doing right now, I mean, their profits will continue to, or their companies will continue to be profitable, and otherwise the companies will need to look for some other forms of income, let's say. So I don't know, in terms, for example, or something that I always think about are cars, that, I don't know, countries say that they will stop, or they will tell the auto manufacturers to stop producing only combustible engine cars by 2050 or something like that, but they don't say that from that 2050 they can still producing hybrid cars, which they have that kind of old-fashioned engine component. So it's, I mean, it's kind of trying to trick the normal people about a system that they want to carry on producing, let's say. Anything about this? Something that you think might be interesting from the conclusions of COP26? Next one, UK inflation rises to the highest level since 2011. This is a big one as well. Bigger than expected jump to 4.2% in October adds pressure on Bank of England to raise interest rates. So inflation goes up, central banks need to kind of to stop that inflation going up. They need to raise interest rates, and it is one of the ways to try to keep inflation rates steady, or let's say around 2%, which is what central banks always look for. Yeah. So energy prices, gas, petrol, and all of that. Yeah. Anything else about this? What do you think might happen with interest rates and inflation rates in the near future that might affect our portfolio or trade ideas?
Interest rates will rise.
How that might affect stocks, for example.
If you have bonds, then the value of the bonds will go down.
The price of the bond.
Sorry, the price of the bond. And with respect to stocks, I mean, if the company has a lot of capital, has a lot of debt within the structure, then it might affect the company.
Good. Very good. Anything else? Are you all done with the... Thank you. Okay. So yeah, in terms of bonds, when interest rates rise, price of the bonds go down. I mean, I can explain that in a minute with our portfolio performance. And with stocks, has to do pretty much everything with what the companies are going to earn in the future, and then all those earnings discounted back to present. So if rates are higher those profits kind of get smaller with the higher interest rates. So yes, I mean, in general, share prices should go down with interest rates going up. And yeah, very good, thank you for that. I mean, don't be afraid of saying anything that you might think is right, but that doesn't make sense at all. I mean, nobody is going to laugh at you or anything like that. So, I mean, it's important that you just speak and you get confident about saying what you think, even though it might be something nonsense. Okay, I mean, this is a kind of a conversation. Cool, next one. Why do I have two here? Okay. Yeah, UK and European natural gas prices at the big gains over past week. Yeah, kind of related to interest rates and energy prices going up. And the thing is that we all are talking about greener energies and all of that, and we need to either install solar panels or wind turbines everywhere. But how about gas and, I don't know, the CO2 that it emits to the atmosphere? I mean, I don't know exactly what gas emits to the atmosphere, but probably not very good. So if we burn gas, what goes to the atmosphere probably is not very good. So how do we warm our houses? For example, if we need natural gas to warm our houses, if we don't produce or if we don't extract gas anymore, how are we going to warm our houses? That's another important question to ask. So yeah, and then you have those political issues, I don't know, between Russia not willing to export more gas to Europe, or Northern Africa, Morocco and Mauritania and all of these countries as well pumping gas to Europe. So what happens if they cut those lines and all of that? So as I said, thank you. As I said last week, when you read news on the Financial Times or wherever it is, don't just read the news and that's it. You need to start with the mindset of thinking how this could affect the stocks that we have in our portfolio, or the stocks that you have in your own portfolio or private portfolios or whatever it is. Okay, so it's important. That is important. Amazon to stop accepting Visa credit cards in UK in battle over high fees. Fair enough. So Amazon makes tons of money, but apparently for them they don't make enough money that Visa charges Amazon too much for the purchases. So Amazon is saying we won't accept Visa credit cards in the UK. So I read something, where is it? Yeah, this one. I mean, a 5% move just for this news is huge. I mean, the thing is, 5%, we might think in Tesla that might move more than 10% a day, and this 5% we might think that is nothing, but 5% is huge. And just because an article about this. The thing is that probably Visa gets so much money from Amazon that an article like this makes the share price of Visa go down by 5%. I don't know. I don't know what's now if it is still dropping 5%, 5.56. Okay, you cannot see it not here. This is not a very good graph, but yeah, there is. Cool. Any more relevant news? I don't know, about banks or UK businesses or I don't know, politics. Yeah, go ahead, please.
I don't know if it's relevant, but I think Joe Biden recently passed his infrastructure bill, like trillions. And in specific, I don't know what he spent, but that's a big one.
Yeah, probably in everything. Just to kind of put more money into the system by building, I don't know, bridges and tunnels and all of that. So yeah, good point. I mean, that famous trillion packet investment of Joe Biden as well. I mean, to make the economy run by big companies building those infrastructures, those companies hiring people, those people getting their monthly salary, those people spending in shops and traveling and all of that. So that's the kind of the circle that the US president is looking for. But then of course we have that creates a massive debt, more debt on top of the huge debt that, let's say, most of the countries in the world have at the minute. I mean, COVID was awful for the finances of the governments, and now to reactivate their economies, they need to spend and borrow more money, and that is even worse for their finances. So the governments right now have no penny, let's say. Cool, thank you for that. Anything else? That's what I want. And yeah, very relevant. So again, don't be afraid of saying something that is not relevant, because yeah, probably it is. Cool, so let's continue. What do we have here? Market update, indices and stocks. Okay, I will go quickly over this because, I mean, not much has happened in the past 2 weeks. So this is the S&P 500, kind of the most important, let's say, world index, but as well the most important US index. So this is from 2000. Since COVID pandemic, this is beginning of March. I mean, it's been a pretty outstanding rise from, I don't know, 2,200 so to 4,700, more than 50%, which is pretty striking. In the past 2 weeks, this small interval, which probably doesn't mean anything. We haven't seen any big movement in the past 2 weeks. Nasdaq 100, similar pattern. Dow Jones probably, yeah, similar as well. Dow Jones, we can see here a bit weaker than Nasdaq and S&P. And actually the S&P, the strongest one of the three, sorry. It almost reached that highest point. Nasdaq a bit lower, and Dow even lower. Then European stocks, let's check the Euro 50. Euro 50, for example, it's made new highs in the past 2 weeks. Probably because the value of the euro against the dollar has come down quite significantly in the past 2 weeks. So that makes European stocks rise. If anyone wants to know a bit more about that, come and speak to me at the end or after the meeting. What else? Let's check UK FTSE 100. Is this daily? Yes, I think so. So yeah, as well, I mean, different. It did a kind of a maximum here, but then it's come down in the past 2 days. So yeah, not much. And UK as well, as I say here. No, not here. Okay, I don't know why now I don't have it anymore. This one. So yeah, similar situation. US markets at all-time highs. Some UK and EU markets not yet above March 2020 highs. An index or a stock that you want me to put, I mean, the chart or discuss or anything? No, right. The platform portfolio performance. Cool. So, anyone in the fund meeting last week? No one? Okay, good. So yeah, I bought 4 bonds. Actually, yeah, let me go quickly over this and then I will explain a bit more. But at the moment we have, I mean, we started with 1 million euros. We have at the moment 4 bonds, and let me show you the bonds, what the bonds are. So one of them is an Italian BTP bond maturing in 2033. Another one is a Norwegian bond maturing 2024, a UK bond maturing 2045, and a Portuguese bond maturing 2045. So each, I mean, we have 50,000 euros invested in each bond. And at the moment we are losing money. We are losing what? Yeah, £3,000 more or less. This is our current account value. I don't know if you can see it. 997, let's say, K. So if I put here, we bought, for example, I bought this Italian bond last Wednesday before the meeting. I mean that morning. So at a price of 116, it is right now at 114. So yeah, that kind of more or less the same. I think the bonds have done something similar. But I will explain why I bought those bonds and all of that. Probably it will be in the next meeting, because today I'm covering stocks. But if we have some time, I can go quickly over.
Are they government bonds or?
Yes, sorry. Okay, where is the? They are all government bonds. Yes, Italian bond, Norwegian bond, UK's bond, and Portugal. So yeah, government bonds. Cool. So let me carry on. If you have any more questions, I will explain, I think, a bit more throughout the meeting. So probably I might answer some of the questions. So what do we have next? Okay, important. My intentions with our portfolio. I didn't know if to put this slide before the last one, but anyway. So my view on the market for the next month is quite pessimistic. So we will play conservatively. What I mean by that is that unfortunately for us as individual investors, if we put any money in the stock market today, we will probably lose money for the next, in my opinion, for the next 1 or 2 years, just because the stock indices are pretty high at the moment, in my opinion, again. So because of that, we will have more or less 50% in stocks, so 500k or 500,000 euros in stocks, and the same in bonds. I mean, when I say pessimistic in terms of the stock market, actually that as well goes to the bond market, but I mean in particular with the stock market. And when we say that we will play conservatively, that 50% might sound conservative, but I would say that something conservative is maybe 60% bonds, 40% stocks, maybe even 70% bonds, 30% stocks. But that might be a bit boring for you because we might not have many stocks in our portfolio. So there we go. I mean, it's funny because the other day there was a group you probably saw that slide. There was a group which had, I don't know, 30 stocks or so. Do you remember that one? So yeah, around 50k in each position. So yeah, more or less 10 stocks and 10 bonds. And I want you is to come up with most of those 10 stocks. I can do the part of the bonds because it tends to be the boring part and the part that kind of analysts or you know less about. So yeah, that's what I'm trying to do and what you need to try to do to come up with a trade idea, and then we will put that trade and we will have your company in our portfolio. Because I mean, I could buy some companies, but I think it's important that most of them are your trades and your companies. So what do you think about this portfolio structure? Any suggestions? What do you think about the current market? And okay, first, what do you think about this portfolio structure? Any suggestions? Anyone? For example, from your perspective, I don't know, probably most of you or some of you will have traded the market with your real money some point in the past, or so with that in mind, what do you think about this? The thing is that probably your ideas in terms of investing are quite crazy, because I mean probably most of you are here because for the past, I don't know, let's say 10 years or for the past year and a half, you've seen that if you buy pretty much anything, it will go up and you will make money, and you think that you are amazing and you won't have to work and all of those crazy things. But that is not the real market, unfortunately. So that's why it is important to understand bonds, because in your future portfolios, once you become a bit more mature in terms of investing, you should be looking at portfolios like that, and you should be forgetting about things like cryptocurrencies, which you might have a very, very small part in your portfolios, but I would say never more than 5%, and that would be too much in my opinion. So what do you think about this? Again, thinking of what you've had in the past, or what in your trading platform, what you had in your trading platform. Nothing? Cool. So now with this one, what do you think about the current market? I want this one, yes. I want every one of you to tell me or to tell the group something about what you think about the market. Because I mean, I guess that you are here because you kind of like, or at least you are a bit interested in the market as a whole. And when I say the market as a whole, I mean, yes, what Tesla does, or what Facebook or Amazon or the S&P 500. So who wants to start? I mean, you just need to say, I think the market will continue to go up because Biden will put $1 trillion in the market, and central banks will keep interest rates so low. So who wants to start? Just a phrase or a sentence or 2 sentences. And all of you will have to say something, so think. Yes.
Right, so I think S&P 500, or American stocks, probably the next year, probably won't perform very well. Historically, European stocks are quite a lot undervalued compared to the American stocks, so I'm probably more into European stocks at the minute, a lot better value.
That's really good. Next one. It's not easy to be better than that, mate. Next one. Yes, go ahead, please.
As long as the interest rates are low, the the markets might continue to go up. But as soon as the Fed rises the interest rates, the market would reflect.
Really good as well. I like you guys. Really, really good. And an interesting point about that is that the market tends to, or kind of the market is more or less 6 months ahead in the future. So the market kind of moves depending on what it thinks what's going to happen in the next 6 months. So if in 6 months interest rates go up, that will be reflected now. Okay.
Yes, and also like a lot of governments are pumping in money into the economy to create demand, and it's causing a sort of I don't know. It's causing the markets to go up, but very temporarily. It's not something permanent.
Okay. Cool. Next one. Yes, Conrad.
I'm just guessing, but like maybe because with like inflation and like interest rates maybe going up in the future, most stocks could fall down, but like maybe in bank stocks could go up because then we could charge more money for loans. Just a guess.
Very good. Very good. We will need to see if that is completely right, because I mean there are so many factors underlying rises in interest rates. But yes, very interesting, Conrad. I mean, again, we could, as you will later see, we could Google what companies or sectors do well historically when interest rates rise. Okay, very good. Thank you. Next one, Gabriel.
I was going to mention, obviously, with the increase in inflation, I think it's going to impact everything along currencies with capital flows coming in and out, wherever it may be. So, I don't know, I think currency would be an interesting one, just with regards to capital flows and the impact it has from inflation.
Yeah, good. I mean, I don't think we can trade FX directly, but yeah, we could be looking at some kind of companies that are related to currencies. I don't know, such as I don't know if it is it trades in the market, but Western Union, for example, or things like that. I think so. So yeah, good point. Next one, Oliver. Your time. What do you have? What is your feeling at the moment of the market? Do you think it will go up? Do you think it will go down? What's your feeling of what you see on your laptop, or when you read things, or when you read a video on YouTube or something like that?
I think the current market is not stable.
What do you mean by stable?
I think it's not stable.
Okay, sorry.
Yeah.
Not stable. And what do you mean by not stable? Maybe something in the lines that I think one of you said. Maybe that the market doesn't know where to go or where to head to. Because the
future trends, sometimes it's hard to predict. Yes, and the customers' requirements is not is changeable, and many and also may follow some popular new things. So yeah.
Okay. So yeah, I mean, I like about that not stable, because so far we have some opinions that the rates, we can say that the rates are likely to go up, but at the minute they are down, so stocks and assets should go up in price, but then we have other ideas that yes, indeed, interest rates will go up, so prices of assets will go down. So yeah, we have that, which is probably very true because the market right now doesn't know where to go. So we have 3 of you. Yes, who wants to go next? Yes, please.
My point is also tied with the inflation because that's a very big event, I'd say, because it's not only the inflation rates in the UK, it's in different parts of the world are rising. So yeah, like as you said, it's going to be unstable because I mean I don't remember if it was in the Financial Times article, but I read somewhere that it's going to get worse by the summer of 2022. So yeah, I'm not very hopeful.
Yeah. Yeah, I mean, kind of inflation is going up pretty much everywhere in the world, and I mean I don't know summer next year, but let's see what happens this winter in Europe, for example, with energy prices. I mean, electricity prices have skyrocketed, same with natural gas, same with fuel, so yeah, everything seems to be in that way. Thank you. Next.
I agree with the inflation there. It might be unstable because of the fluctuation of inflation of interest rate, but I feel like after COVID, all these like companies and governments will be more careful about the market. Like I'm just guessing that companies might be more careful in like managing those risks in their portfolios, and governments, there might be some government like intervention in the market as well, just to avoid some like fraud or failure.
Okay. So when you say that companies are gonna be a bit more conservative with their, let's say, finances, you mean that they will not invest as much in some areas as in the past or before COVID? You mean that?
Yeah, and probably just after COVID, something like there are so many uncertainties.
Yeah.
They'll be more careful in investing.
Cool, very good. And finally,
I think the current market it's gonna be very volatile in the future, like, cause you see there's the energy structure is changing in the world, so it's just shutting down many industries somehow and creating more industries. So maybe you should be more conservative in the future years, and then try to invest in some industries that seems to get most support from government and the political side. And,
I thought you were going to say green
yeah,
companies.
I was going to say that. I mean, yeah, green side, and try to invest something in that, but still be conservative. Don't put too much money in that.
Good, very good. Yeah, apparently the word green, I don't know, is the favorite word right now in investing. Cool, very, very good. Thank you very much, guys. I do agree with everyone because there are reasons for the market to go down in the near future, and there are still reasons for the market to keep going up in the near future. Yes, Gabriel.
If we see interest rates rise, the cost of money is going to increase, which surely will also naturally decrease the market because it's going to cost you more to hold your money in stocks rather than in the bank. So that's also going to play a negative factor onto that.
Mm-hmm. Yeah, it's all about with that money in the future, bringing it back into the present, which you have probably studied in some financial module or.
Can we put commodities in our portfolio?
No, directly, but we could perfectly invest in Shell or BP or things like that.
So no gold and
No, but we could go to a mining company. Yes. Good point. It's 10 to and I need to explain the main thing of the meeting. Right. So, yeah, probably because of that, it makes sense to do that 50-50 allocation between bonds and equities. But yeah, it's a very, very interesting moment right now. So, today's main point are equities. So first, asset classes. Okay, first for the next, I don't know, 3, 4, 5 slides, I took all this information from my IMC book. So investors must understand the particular characteristics of each separate asset class to make an appropriate asset allocation for their portfolio. So, I mean, this is common sense. We need to understand what the stocks and what bonds are if we want to have them in our portfolios. Equities, shares, and fixed income bonds comprise the two main asset classes of a portfolio, normally. Then we have a small part in commodities, a small part in cryptocurrencies or kind of alternative investments, real estate, and all of that. But always equity and bonds are the main part of a portfolio. So equities, stocks, shares, they are the same. Equity stakes represent part ownership of a company and normally come with voting rights and expectation of future dividend payments. So I buy a stock or some stocks of a company, and that allows me to kind of represent part of the company. So it feels kind of a bit weird to think that if I buy stocks in Shell or BP, I will have anything to do with the company, but yes, you do have something to do with the company. So the directors of the company and the governance and all of that, it's by itself doesn't have anything to do with the company in terms of ownership. The investors are the ones that own the company, not the workers, not the worker that produces that part for a machine. No, it's the investors, which feels, I don't know, a bit weird, but it's in that way, unless those people have as well stocks in the company. So yeah, voting rights, that could be what the company might be doing in the next 5-10 years, the direction that the company might want to take. So all of that, the board of directors will come up with a plan, but in the end it is the investors that will say yes or no to that plan, so to where the company should be heading to. Okay, and future dividend payments, yes, part of the earnings of the company normally are handed out as dividends to investors. So that's a big note. So when you buy a stock in your trading platform, I mean Exante or eToro or those trading platforms, normally you don't buy the stock, you buy what is called a CFD, a contract for difference. As well, anyone that wants to know a bit more about that, just come to me after the meeting. But yeah, that CFD is kind of, you buy the stock, if it goes up and you bought the stock, you make money. If it goes down and you sell, you lose money and all of that. But in terms of the stock, you don't have, or you wouldn't have that ownership of the company, and you wouldn't have that voting right. You would have that dividend payment, but not really, I think, the dividend of the company itself, but a dividend that the trading platform will generate for you. If you buy the stocks through your, I don't know, ordinary bank or I don't know, an investment platform that is not, or that it's not a CFD, you will buy the stock. And that is another reason why you might be able to buy stocks very cheaply in a trading platform, because really you are not buying the stock because that costs more money to the platform that is doing it. So they do something there, which is very interesting, how trading platforms work. I can show you. Fair enough. It's very interesting how trading platforms work in reality with investors, how they play with them or how they play with us. Very interesting. Two types of shares, ordinary shares and preference shares. Ordinary shares are the ones that all of us know, show the shares that everyone speaks about. The most common type, the ownership of ordinary shares entitles the holder to dividend payments if any are paid. So yeah, what I said. Then preference shares. These are of course not very well known. They pay a fixed dividend no matter what happens to the company. If the company is doing well or not, they will have to pay a dividend to these preference investors, and in case of bankruptcy, preference stockholders are paid before ordinary stockholders. Then bondholders will be paid before these preference stockholders and before, of course, ordinary stockholders. So that is kind of the ladder in which if there are problems, you are paid or not, depending on where you are in the ladder. Issuance of shares. So I'm a company, I'm private. What do I mean by that? A private company is, I don't know, that pizza shop there. That is a private company. So I just cannot do anything with that company. Someone owns that company and that's it. But what happens if I open 5 branches in Leeds and then 50 more in the UK, and then I want to move to the USA? So for that I have 2 ways of getting financing. One is through bonds, or as well through kind of ordinary bank loans, or I can go public, so I can be listed in a stock exchange. So how do I do that? Through an initial public offering, the famous IPO. So IPO just equals business going from private to public stock exchange. And an IPO is the first time that the stock of a private company is offered to the public. Why does a company want to do that? To get money, to expand the business, to buy another company, to open more branches, to hire more people, and all of that. Then in the secondary market, so that same company that is already in the market can issue more shares. I can go a bit more about those secondary issues with you if you are interested in that after the meeting. So for the company, again, for the company to grow, acquire more companies, pay debts, and so on. Then, how is the share price of a company found? So it's just, in this case, no, but yeah, a ratio. So share price equals price to earnings ratio, the famous PE times earnings per share, famous EPS ratio. So, for example, Coca-Cola. So how do we find the share price? Yes, how do we find the share price, but not put in Coca-Cola, Yahoo Finance, and we get the share price there. So it might be a bit tricky to go to the financial statement and look for those ratios. So fortunately, you can get all of those ratios from the financial statement of a company. It tends to be more difficult, and probably for some of them I wouldn't be able to do it because it's sometimes very confusing. So I just don't have the experience to that, but you can go to any website and get this EPS, so 2.04, let's go here, okay, 2.04. So we have, okay, we took the second one, but let's say we now take the first one, price to earnings ratio 27.36, so times 27.36, and we get a number here. So P times EPS. Don't worry about this diluted thing. Again, I can explain you this later. So we have 55.81. So actually we have here the share price, which is indeed 55.82.
Are we meant to be able to see everything on that?
Why is not sharing that? Thank you for that, mate. Stop sharing. Not my screen is. That's funny. No. Let me do this. Okay, let's see if it works. It's actually quite small. Is it F11? Yes. So, so we have price to earnings ratio 27.36 times 2.04. So F11. So we have here 2.04 times 27.36, and this equals 55.81, the share price. So then we have it here. Share price of Coca-Cola is 55.82. Okay, so a share price is just okay. Now I cannot do anything with this. So let me try again this. Sorry guys, this extend. Oh, it doesn't work. And my mouse doesn't move in the screen. Anyway, so let's carry on with this duplicate. So let's carry on. We were here. What happens if I make it big? Okay, now it works. Yes. So yeah, we know that we can get the share price by one of those ratios that is in the financial statement. But a very good question about a lady that is not here today, that came to me after the first meeting. Why does the share of a or the share price of a company moves? And that's, I think, it's a fair question. So first, a company kind of gives investors a financial statement normally every quarter, so 4 times a year. So imagine we take a starting point, the share price of the company will be given but by that ratio in their financial statement. So once we are at that starting point, why does the share price move? Because there are some people in the market, I don't know, analysts in Goldman Sachs or JP Morgan or BlackRock, Fidelity, and all of those big companies that try to predict the next quarter's earnings. Okay, that's very difficult because you cannot predict the future, but they try to do it. So how do they try to predict that, those future earnings? So with maybe past earnings or a tendency of the company with those earnings, are they going up, are they going down, are they more or less in the same range? Then news, is that company selling a product, I don't know, Apple selling 1 billion new iPhones. So those analysts in their kind of programs and Excel spreadsheets, I guess, they will put that new information between quarters in that particular company's prediction or share price prediction, and with that JP Morgan or BlackRock or will have a target price or will buy or sell the shares of that company depending on those analysis of their future or of the future earnings of the company. And by those companies buying, selling, you get a price that moves from quarter to quarter, and then once we reach the next quarter, the price might be at 100, the share price of the company might be at 100, financial or new earnings are released that day. What happens, I mean the famous earnings release of a company, if the analysts were more or less right and they predicted the share price of the company because they predicted properly the earnings of the next quarter, the share price and that ratio of the financial statement will say that it has to be 100. The earnings might surprise positively and they might be better. I mean, the earnings might be better than what the analysts predicted, so that makes the share price to go up that day. And the opposite, if the company did not as well in the last quarter, the share price will go down because what the market thought yesterday, I mean, they thought, or the market thought, that the price was going to be at 100, but the earnings were not good, so that ratio is saying that the share price should be below 100, 95, 97, 99, whatever it is. Okay, and I think one last thing, one last thing, just a warning: dangers of stocks. Stocks always rise in the long run. This is a very dangerous to think about, and I will give you an example of let me maybe put it here of Lloyd's Bank. How do you, is it double L? This one. Is it in here? Charts. So this is the share price of Lloyd's. Why am I giving this example? Because I mean it is a well-known FTSE 100 company. So what happened to those investors that bought or the bank between 1995 and let's say 2008, that after many years they are still losing money? So that is a more common situation in the market, so don't think that the Nasdaq 100, S&P 500, Facebook, Tesla, Amazon, Alphabet, all of those will go up forever, because it won't happen. And that is why it's, I mean, depending on where you are in the market, it's difficult to make money in the next 1-2 years, because you might be buying at a very high point. So that, next, 10 past. We have 5 more minutes before we finish with the second game and then the Kahoot. What do we have next? Good. Analysts trade ideas. Oops, sorry guys, let me do this. What do you have? Have you thought about anything? I can see some people laughing. Have you looked at anything? Yes, please.
I mean, this is quite a generic one, but I was thinking maybe Apple, because, like, if we're gonna be pessimistic about the market, then we've obviously got quite strong brand loyalty, and I think the share price has increased like 65% from £91 on the 1st of July 2021 to 150 quid on the 1st of November, so maybe that's makes it look quite, favourable. Interesting, but not sure.
Okay, Apple. I don't know what to say. Yes, mate.
I don't have any particular ones in mind, but some of the like the nuclear stocks or the fuel for like the nuclear power stations, because they're quite and they receive a bit of funding in the infrastructure bill. I think it's it seems like a mid-term kind of alternative to some of the green energy things. I think some governments will probably be adopting that.
Okay. Do you think that energy prices might be or might keep going up?
What in the mid-term?
Yes.
I think so. Yeah, I don't think like the Saudi producers. I don't think they're agree to produce anymore in the mid-term.
Okay. Yeah, good points. Yeah, the thing is that energy prices are kind of 100% related to profits in those companies, because I mean, if the energy price or the energy that they produce, if the price is very low, kind of their earnings margin is very low. But yeah, good point. Good point. More. Yes.
Maybe some sort of pharmaceutical company coming up to the winter period. I know COVID, it's not looking great as we're coming towards winter, so maybe worth taking a look at one of those companies who are producing more vaccines, the boosters, whatever it may be.
Very good.
Can I add to his point?
Yeah,
Pfizer-
absolutely.
Pfizer is making a pill for COVID, and they've had a contract with the US to mass produce the pill. And the stock price also recently risen about, I don't know exactly, but they have risen quite a bit. And Pfizer is also acquiring another firm, another pharmaceutical company. It's very recent. So I think they're doing well.
Good. I like that. I mean, I like your reasons more than the stocks. I mean, I like the stocks as well, but so let's have a look at is that Pfizer? No, not here. This one. Yeah. Good. So we have three: Apple, some kind of energy firm, and Pfizer. I mean, were you thinking about any other pharmaceutical?
It could be, I don't know which one's going for the, they're all trying to make boosters now, aren't they? Because a lot of countries require a third jab, so I mean, Pfizer's good. I don't know any, I don't know what Moderna looks like, or
Moderna is just a roulette. And yeah, good. I mean, yeah, very good. Anything else? Yes, please.
There's some like semiconductor stocks I think are quite good, because I think they're all needed quite strongly in electric vehicles, and there's a bit of a supply crunch, so whatever they make is getting sold.
Yeah, very good. Very, very good. I mean, they just cannot produce enough chips for what is being demanded. Anything else? Very good. I like this. I like this because I mean, being realistic, it's not kind of important to me what these companies will do in the next 6 months. I mean, it's great if they go up and we win this, but the important to me is that you kind of speak and you kind of get interested in companies and you bring them here and we discuss them and then you follow the company and all of that. I mean, that is to me the most important thing and what I think this is about. So good, it's 1:15.
Can you sell the shares? Or you've got to, whatever you buy, you've got to keep all the way through. Or
Oh,
can you
yeah.
sell midway through.
Yeah, absolutely.
You can.
Yeah. We can buy these companies and then you can send me a message next week or in 3 weeks or in 1 day saying because of this, this and this, we should sell the shares. Okay. And then I will explain in the next meeting why we did that. Yeah, absolutely. So I mean, yeah, that's a really good point. It won't be 10 companies that will be in the portfolio from the beginning to the end. Good point. Right, so quickly. For the energy company and the semiconductor company, I want you to come up with one name for I don't know, the end of this weekend. I will buy Apple, Pfizer, and one energy company and one semiconductor company. And then for the next meeting, which will be in 2 weeks' time, I think it is the 1st of December, I want you to come up with something very simple, such as, do I have something in here? No. What was yeah, I mean something like name of the company, where it is based, share price, maybe an article, 2 articles, recent news, sector, competitors, if you want some ratios, so something very, very simple. So you write it in, I mean, you can send me a message when you have this, and then we will discuss this in the next meeting. But I will buy this for these 4 companies these days. And I will add more bonds to the portfolio as well. Is that okay with you guys? Cool. So yeah, I mean kind of the basics of the company, and then in 2-3 lines why you think we should be buying the company. We can short a company, which I never ever recommend because it's only reserved for the very clever investors with many years in the industry. But yeah, we could do it if you really want. Maybe just because if we go long in all these companies thinking that rates will be kept low and we think these stocks are going up, we might short one stock just in case, or 2 stocks just in case the market goes down. So kind of we hedge those long positions, that famous hedge. Very good. So again, let me now write the price of my, is it this one? No, this is Visa. My Moderna. Moderna Yahoo Finance. So let's do here 247.59. And let's do here a last column quickly. So now what you need to do is to go again and check the share price of your company. So we have, oh,
Tesla won.
Eh?
Tesla won the competition.
what do you mean?
Are we doing the sheet thing?
Yeah.
So Tesla, I think, is the highest.
Okay, that's good, mate. So for 7.59 divided by 2.5.3, that's 1 times 100, that's plus 0.93%. Cool. So now what? Actually, let me share. Right, this is similar. This as well. It was in the slides of the first meeting, so you can read it. This is an example of how you might come up for the ones that haven't said anything about any possible company. This is an example of how you might come up with a company. Okay, so read this slide. Okay, you know, guys, how it works. So right, yeah, I think we can finish by 7:30. Write the share price, and then that formula, very important, a percentage change formula. So what you need to do, if you are doing it on your phone, you need to do kind of step by step, because you cannot do the ratio -1 times 100. So you do first the present time, so the time right now that you wrote in the piece of paper, divided by the price at 6 p.m, so at the beginning, let's say. You find that, so I mean you equal that, you get something, then you subtract -1 to that, you equal that in your phones, and then you times that by 100. And you write down that percentage change. And the person with the highest positive percentage change wins the game. And let's see who is this person and which stock, which is always interesting. In the first meeting was a pharmaceutical company, which was, I think, let me see, I have it here. This is, what, wasn't you, Oliver? Or yes? Did you win the? Did you win this game in the first meeting?
No.
No, it was Jack. Why do I have here this? I think I put this in the wrong direction. But yeah, anyway, the other day it was 1.77 Petros Pharma. I don't know why I did that. I did this. Which is very impressive. Again, I mean, to go up by 1.7% in 1 hour is, I don't know, a pretty wild move. Cool. So I'm going to get ready the Kahoot. So, how about Tesla? 2%. Okay, yeah, I mean, there we go. I mean, it was a good choice. That's what this game is about.
No, I didn't. I wanted.
Oh, okay. You didn't choose it.
Inspiration from you last week.
Good, man. Yeah, it's a good choice. If Tesla is going up that day, probably it's the best choice right now. I mean, there might be some wild companies as well in the Russell 2000 that might do well better than Tesla in 1 hour, but yeah, out of the famous ones, yes. So Kahoot, So now again, grab your phones. And has everyone used a Kahoot before or played a Kahoot game before? The new ones? No. Oh, good. Yes. No. Okay. So you need to go to Kahoot dot IT, this one, and now I will give you a game pin that you need to put. This game pin is a group meetings and yeah, this one, host classic. Okay, so you put, no, I don't want music. So you put this pin or these numbers here, you click enter, and then you put your name. I think you need to put your name after that.
What's the pin?
Yes, sorry.
Yeah, getting famous.
So let me see how we did today.
It's crazy how volatile Tesla is now. It's now like, it was 1096, it's now 1092. It's just in 30 seconds of moving around the room.
Well, it's very big for this game now. Every 2 weeks.
Yes.
We're gonna go first. Right now, Tesla.
It was up by 1% in 15 minutes. You already won the game.
Is everyone done? Okay, no.
Just when it crashed down. There we go.
I don't know what else we could be doing. I guess just wait.
Over the past few years of this, have people, do people mainly lose money on it on the course of the investment thing, or are there people who gain, throughout other years?
First, I'm going to tell you that if you go to the small print in any trading platform.
I mean, for the competition.
Ah, okay.
Not
Okay.
obviously, most people lose money. I'm talking about on this.
Last year, I think most of the groups were above the 1 million,
Oh, really?
just because everything went up.
Yeah.
So
this year it's damage
Mixed.
reputation.
yeah, I mean this year we won't probably see big gains in the groups. I don't think so. Cool. So. Well, yeah, I mean, one of the things of the 50% bonds is that. Okay, I think there is one here. General Motors. Is that correct? So Tesla didn't win.
Oh,
So General Motors and Jinyan won. So very, very well done with General Motors from 62.61 to 64.93. Is it General Motors or GM? Ooh, GM. General Motors. General. Okay, cannot make it here. Right. If this is correct, let me try it in ex-ante. So okay, we are now, I don't know. Anyway, so yes, 2:30, 3:30. Oh, but that feels. The thing is, I cannot see the time. But yes, I mean, I guess that it was just before this. So very, very well done.
So what do you want?
So right, let's play the Kahoot. Sorry guys that we are going over the 7:30. Right, everyone. 3-6. No, because we are 8 people. So cool. Now yes. So let's start. So first question: Kahoot at home. We are not playing it at home. First question is: the S&P 500 started the session today at which level? It has to do with how quick you are. Good. Okay, why is it showing 2 of you didn't answer? No? Did everyone answer?
No, my phone got stuck.
Okay. Anne, anyone else? You? Okay, so now sorry guys, let's play it again. Now you know that answer. No, but now we need to do it again. Sorry guys, let's do it again. Quickly. So that's the pin, and now everyone please answer A for the first question, or C. I don't know. Let's do C. Everyone gets their no, because then you get more points if you are quicker. So yeah, let's everyone make. So everyone please answer A, and that will be 0 for everyone. So 6, 7, 8. Cool, thank you. No, but who answered C? Who answered C? I mean,
I can't see A, B, and C. How do I know which?
You cannot see.
No.
Correspond with the screen, so like we got the buttons here and then it shows on the board.
Yeah, but then it's not written which is A, which is B, and which is C.
Oh no, there's no idea.
Okay.
Yeah.
Oh, so A, B, C, D.
Right, so I need to.
Sorry, guys.
No worries. So
Breaking the rules.
in 9, 6, 9. So I need to subtract that from your final score if you get or if you win this. Let's go. Second question. The stock market that has risen the most since the COVID-19 crisis is. Do you have now all the colors? Only 2 of you. I think that one was quite easy. Oh, okay. Okay. again. I'm kind of checking the markets, and you would have got this one.
Actually, I'll just do it right presentation.
7311. How much did the S&P 500 fall from peak to trough as a result of the coronavirus fears? This is an interesting question. 35%, which is a lot. Good, guys. Oh, that was your first one, Conrad.
Yeah.
What company does not have a market cap of more than $1 trillion? No idea, Conrad. Oh, very good.
Because I did have an idea.
Yes. Meta or Facebook. Next one. How much do Apple, Alphabet, Amazon, Facebook, or Meta and Microsoft currently account for in the S&P 500? So all those 5 companies together. How much is their weight in the whole index? Yeah, very good. That was a pretty difficult one. 23%. That was as in June 2021. What is drawdown in an investment? Very, very important concept, which I didn't talk about, and that I think I should have. But yeah, very important. Very good. Yes, from peak to trough. So it would be, let's go to the S&P 500. So draw down from kind of a recent drawdown, might be from here to here. If we want to take it the highest one, probably from here to here, which was more than 50%. That one would be the historic one, but yeah, very important drawdown. Oops, sorry. Oliver, I have to subtract some points. Drawdown is important to measure what? Yield, alpha, beta, or risk. Very important as well, because drawdown tells you, oh, okay. Yeah, good. Drawdown tells you, because it tells you how much an asset goes from peak to trough. That tells you how risky the asset is. If we take Tesla, that goes from 1,100 to 900 in a short period of time. Apart from doing that in a short period of time, it's kind of a big drawdown. And if we take Coca-Cola or McDonald's, for example, it moves a lot less, and that means it is a less risky investment because it has a much smaller drawdown. Joel, very good. And Conrad, oh, you will be between. It will be between. A percentage change in an asset is calculated. Oh, come on, this one is this one is easy. This one is easy because you saw it today in one of the slides. Actually, I mean, it's not a complete formula, but I mean, as well, you can have it in your mind. That formula should give you something close to 1, and yeah, good. So latest price is kind of the most recent one. Could be higher or lower the original one, and that will tell you if it is positive or negative. And finally, we have Conrad. Did you win the one last week? I think so.
Yeah.
Good, mate.
Yeah.
And So yeah, between Conrad and Joel. Who was Joel? Good, mate. So finally, true or false. This one is pretty easy. ETFs are active or passive investments. I haven't spoken about ETFs, so this is a bit kind of a general knowledge. But yeah, very important as well to know what ETFs are. So one of you has not answered yet. Oh yeah. Oh, that was quite surprising. So, I mean, anyone as well that wants to know what ETFs are, exchange traded funds, just come to me after the meeting. So, third position, Oliver, but I don't know if it was in the third position because you got the first one, then Joel, and winner. So you missed an you missed an opportunity, Joel. Cool. So well done, Conrad, again. So what do you want?
I go for Ferrero Rocher.
Okay.
Switch it around.
Very good. So final minute, guys. Final slide. Thank you very much for coming. You can message me at any moment on Facebook or WhatsApp. You can ask me for my number. You can talk to me now if you want to discuss something in private, after the meeting. Look for possible trades for the ones that didn't come up with anything. Okay, so you two, you and you. And do that, please. I hope it doesn't take you more than, 10 minutes. I don't want... you can spend more than 10 minutes, of course. And then see you in 2 weeks, Wednesday, 1st of December, 6 p.m. I don't know where it will be. It might be here. It might be in our first meeting room. It might be anywhere else. Thank you very much, guys.